Hello there, my friends. Chris Marcus here with you for Arcadia Economics on another exciting day in the financial markets. And not just because Rafi Farber of the Endgame Investor is joining me on the show for some rather exciting news that he's been digging into and will share with us today. And as we take a quick look at the silver price, about $26.20. A very volatile session here. I'm sure that drip down there was normal. But real quick, before we get started, I will stand up because I am wearing my First Majestic polo shirt today as the sun glares in through the window. Today's video brought to you by First Majestic. Certainly a stock that I can't give legal financial advice, but may want to do some due diligence on, certainly by the time Rafi is done today. So with that said, thank you, First Majestic, for bringing us today's show. And Rafi, welcome on in. It's great to have you here today.
Good to be back, Chris. Congratulations about Texas being open again in a week.
Yeah, well, apparently it didn't start just yet, as I learned in Whole Foods yesterday. But anyway, thank you. It's nice. See how that goes. And perhaps in the meantime, I'll keep myself busy watching silver videos or reading the Endgame Investor articles, because I was pretty shocked to see you report that now we're seeing silver leaving the COMEX. So I will let you take it away, sir.
Yes, we are seeing silver leaving the COMEX, not yet in enormous quantities, but starting, the active March contract began deliveries on February 26th. So I don't have the exact numbers in front of me, but I took a look at the Excel spreadsheet you can down daily on the CME website, and from then until today, I think the number is about 3.5 million ounces have left the building, both in a combination of registered meaning for sale for contracts that have moved to eligible, meaning not for sale anymore, and also eligible stocks that have just left the building and probably gone shipped to the mints or something to satisfy the premiums there. So it's about 3.5 million ounces, which is something about 700 contracts. I'm not sure what the rules are. Do you know, Chris, that once a delivery is called for, what's the deadline? Do they have until the end of the month? Do they have a few days? When do they have to deliver on it?
I'm not sure, although A, we can check on that. B, my guess is that whatever the thought of deadlines are probably different than how it will play out. But let me find out rather than guess on that.
Yeah, I heard from someone that they have until the end of the month to satisfy a delivery request, but I'm not sure if that's true. But if it is true, then there should be about 10,500 contracts being delivered this month in total. So far we have about 700, and we'll see how things go. I mean, the lower the paper price goes, the more deliveries will be made, because it'll be more worth it for them to be made. So on the way I see it, the bullion banks are stuck on this because they need, as we know from the SLV prospectus and other ETFs that alter their prospectuses in the beginning of the month, they are running out of silver to put in those ETFs. So on the one hand, they need the paper price lower so they can redeem some of that physical from those ETFs. So they would have to, then they have the extra silver to put back in if the silver price goes up. So they need the paper price as low as possible. But on the other hand, the lower they push the paper price, the more people are going to call for delivery. So they're kind of stuck between a rock and a silver bar in a hard place, you could say.
I like what you did there. That was clever. And actually, you raised an interesting point. I was just writing down a note about what you said, lower paper price regarding deliveries. And it reminds me of something I came across earlier this week that I'm going to play here. Now, the gentleman in this video is talking about Ethereum, yet I think that the exact concept he is describing, as I will show on the chart, applies to silver. So,
and what you're looking at there.
You can hear that, Rafi?
Yes, I can.
All right.
Do you remember when the crude oil went negative $40
Yeah.
That's the same tail. That's the tail that I keep talking about that I love. So what happened here, Dick, is anybody that trades these cryptos on leverage, which means that they're basically trading on the exchanges or they're trading with stops, got destroyed this morning because it went down, and anybody that had a stop within 50% of where the market closed yesterday was probably knocked out of this market. And visualize it. Even if you got in here and you put a stop down in this range, 13, 14, you're gone. So you'd wake up this morning, your Ethereum is gone, your money is gone, and Ethereum is back up here. So this.
What am I even looking at?
That was an Ethereum chart where it looked like a flash crash or a spoof. And the reason I found that quite interesting, let me see, because here you have, let's see, this is March 1st. So this is Monday. And here you see the spoof down. I have the volume chart somewhere in there. But I guess when I was thinking about what that guy said, and I don't know how I didn't really sink in properly before, but when these happen, people are getting stopped out. So if you can jam through the stops like that, which Bart Chilton confirmed that is exactly what they were doing, essentially that's a way of getting out of a short contract. You're spoofing these people out of their gold and silver, or out of their technically COMEX delivery contracts. But look, here you have the thing just floating around there, 2680 for, I don't know, almost 8 hours, the whole day, 12 hours, it, floats in that range. And then just there, drops off a cliff. I have the volume chart somewhere, spoofed again here, and then rallies back up. So it's like if you just, at 12 o'clock on Monday, decided to go hit the beach and leave your cell phone behind, and you come back, 26, 28 hours later, you'd be like, hey, nothing happened to the price, except you may have been stopped out. And also we see that Goldman Sachs was issuing contracts for delivery, which I'll put in the category of things that I'm glad I would never have to explain in front of a judge or jury. So Rafi, what do you think about that?
Well, I think about it this way. I'll tell you a story about March 2020 when the big silver crash happened and silver went down to like something like $11, right? I remember calling up my brokerage and saying, look, if I open a futures account, can I buy a micro silver futures contract and just get it delivered? I want a bar, like I want to get that stuff from the COMEX. And they said, no, we don't do deliveries for retail accounts. We can't do that. So I'm thinking, like, if you want physical silver, and and let's say you have a futures account and that can get delivery from the COMEX, which is not easy, are you going to set a stop? I mean, who sets stops for silver? And silver traders, other banks, or other hedge funds, or whoever is using these contracts for trading. If I wanted silver, I wouldn't set a stop. I would just buy the contract and wait for delivery. So if they're spoofing, yeah, they're spoofing, but they're spoofing traders because only traders set stops for these things. So I say, look, let them do it. Keep giving us discounts by scaring the hedge funds or whoever is holding on the other side of these longs. Scare them out. What do I care? I mean, I just have to be patient because they can't keep doing this forever, especially with the silver stocks going so thin now. I mean, I checked the SLV ETF's bar list. And I think something like 130 million ounces of silver are in the JP Morgan vault. So those are already accounted for in the SLV ETF, and I think they have like about 90 million more in the JP Morgan vault. But I mean, there's not much left. And you showed me that chart on I think February 1st or January 30th when the big spike was happening. It was 2 days, and I think 120 million ounces were flown into SLV. Supposedly, but one more hit like that and the game is over. So let them spoof. What do I care? It doesn't bother me personally.
And it's interesting the choice of words you use there. One more hit like that. I've actually had more than one person write in and describe what happened. Here's the same thing. I'll bet people got stopped out there. And I agree with what you're saying, Rafi. You got to be almost nuts to be trading these markets on, I'm not trying to say this to anyone who's trading these markets on margin and stops, but I mean, it's like if there's ever, that's the whole game, is taking advantage of the people who've been trading it on margin and stops. That's the way it's been since the 80s. They're still doing it today. I mean, we'll get to the regulators. I mean, I can't see a way in which the CFTC isn't the paid off cop.
Right.
I can't say that they are, but I can't, if there's a way that they're not, I can't find it. And go ahead.
I'm sure they are. I mean, that's what government is. I mean, you get in the right side of it. It doesn't matter what part of government, as long as you have the in with the. It's the same with building a regulatory framework around yourself. If you're big business or being a friend of the police, and you can get away with graft. But it's all the same stuff and different. This is just a financial reflection of it. It's all the same thing. I want to take a minute though and reframe this whole manipulation problem debate. The spoofing is a problem. I'm not going to say it's not a problem, and it's not going to say it's not annoying. It is annoying, but we have to see this entire manipulation thing, reframe it, and see it in a different way. Meaning, if you think about money itself, right? when the dollar was defined as a weight of silver or weight of gold, right? You didn't need futures contracts in gold and silver. You had because every other commodity on the commodity exchange, whoever was selling those futures contracts, every other commodity was priced in gold and silver because that was the money. So you would have futures trading in other commodities, but not futures trading in gold and silver. That wouldn't make any sense. So really, what is the manipulation here? The manipulation isn't necessarily the center of it, at least that bullion banks can spoof at the London fix every morning at 7:30 a.m. or whatever it is. That's part of it. But the very existence of gold and silver futures paper markets, that is the manipulation. Because once you have that thing, then you can trade, you can issue all these contracts, and knowing that they're not going to get delivered, you can soak up all of that demand, all of that speculative demand, because most people buy futures contracts for speculative demand. And once you absorb all of that demand into this paper shell, then it's not in reality anymore. But now it's starting to burst out of that. And once it gets back into the physical markets, then this entire manipulation of the very existence of gold and silver futures priced in dollars, which makes no sense, that all comes to an end. And then the real silver supply that exists comes to the realization of the economy and the market. And that's when the dollar falls.
Yeah, well, that's why I wrote the book. I thought it was heading there eventually. I tried to do my best to not throw out timelines I couldn't back up, but it's not, if it's like I found the needle in the haystack, I just can't figure out how else this ends. And actually, I have something I would love to get your opinion on if you'd be kind enough to indulge me here.
All right.
So, we sit here, we know it's rigged, manipulated, COMEX, whatever you want to call it, is the system, the way banks work. I agree with what you're saying, that certainly rather than getting our feathers ruffled as much as you can, turn that around and say, all right, well, if they didn't have the COMEX, the price would probably be a lot higher right now. So the fact that, if these are the people who have income coming in right now, it goes to your advantage. But in terms of how it ultimately unravels, I was thinking about it the other day where, we've heard for years that, hey, when gold's at $2,000 or silver's at $50, we're going to be shooting each other in the streets. It's not a world you want to live in. And I don't know, maybe that's true. Although given the way everything about this deep state is a big paper feared tiger that's all bully on the schoolyard and you stand up to them once and they usually crumble. I was thinking, I don't know, is it guaranteed that just because gold or silver went up? I mean, we already had gold hit $2,000 an ounce. And outside of you, me, and the people watching some of these types of shows, I don't think anybody in the public actually knew about it. And what hit me earlier this week is that if we know that, as we'll dig into and verify that on the COMEX, Jeff Christian, in his comment, was right that it's not a default if they settle to cash. Now, I think that defeats the whole purpose, but it hit me. So it's like, actually, you could have a scenario where you could reset gold and silver to any level you want. You can reset gold to $1 million an ounce and silver to, $30,000 an ounce. And if you just have the banks pay out in cash the $28 in silver, $1,700, $1,800 in gold, and then let the physical trade in the free market, the only thing they'll have to acknowledge is the open paper loss they have right now. But other than that, I mean, you don't even have to have the banking system collapse. Even if there's a small loss, I mean, the Fed could print that over. Janet's going big, just add it to her shopping basket. And in fact, you could say that the higher the number, effectively, let's say the US still has 2 or 3 ounces of gold that they haven't leased out somewhere as a souvenir, make it 5 trillion an ounce. Maybe that's why they want to do the trillion ounce million platinum coin. Because, all right, if you have 3 ounces, make it 100 trillion an ounce, wiped out the debt, pay off Social Security and Medicare, and you actually don't even, I'm not sure if that's right, but I can't think of any flaw in that. And perhaps the best part is that would be the best outcome for the banks. So there's actually like a real incentive for something like that to happen. So long question or story, but what do you think?
All right. So I hear what you're saying. I'm going to try to put you on a little bit of a different foundation in terms of monetary theory. What you were describing in terms of setting gold and silver in the paper market at a trillion or a schmillion or a gazillion, whatever the number is, you are describing hyperinflation. That's what you're describing. So let's say the COMEX
Rafi?
says yes.
May I hop in for a second? Just it feels an important Austrian distinction. I would describe that the 40% of the dollars in existence printed in the last year, that is the hyperinflation. That's already happened.
Of the money supply, yes. Yeah, you're right, that's true.
Is just going to be the reflection.
That's true, that's 100%. So when I use the term hyperinflation, I'm talking about, the classic Weimar type of, effect of the hyperinflation of the money supply. So the day that the COMEX goes down, meaning they say, oh, we don't have any gold and silver left, I guess we're going to settle in cash. Then if you remember the feeling that we had on the morning of February 1st, when we were doing that last roundtable, the morning that silver went to, above 30, and we were wondering where it was going to open, and APMEX was down and all this and that, and nobody had any supply. So what do you think is going to happen in the physical markets when the COMEX says, oh, we ran out? What's going to happen is that nobody is going to accept any dollars for any amount of silver coins. And do you think APMEX is going to sell or any of these bullion dealers are going to sell anything for paper when the COMEX itself says we're out? No, the only way you can get gold or silver in that scenario is if you barter your labor with it for it, or some kind of real asset. They say, oh, give me silver, okay, give me your house, give me your car, and then I'll give you some coins. But what is that? What's happening there? What's happening there is you're back on a gold and silver standard. You're exchanging coins for stuff, not paper. So when the COMEX says we don't have any silver left, the dollar is dead, because the dollar is based on gold even now, right now. It's not a gold standard because it's not a flat exchange rate, but it still can buy gold and silver. But once it can't, because the COMEX is out, then the dollar cannot buy anything. And all the debt goes away, but then it's not good for the banks, because all paper assets on their balance sheet become worthless, because they'll need gold or silver to trade for it, not paper. So yeah, it's like shooting the moon in hearts. You know that game Hearts? Where each heart is a point and the queen of spades is 13. So you're trying to get as few points as possible. That's the objective of the game. But if you get all the points, if you get all of it, then what happens is you get no points and all your opponents get all the points. So yeah, the banks could shoot the moon, and they'll be quazillionaires or schmillionaires or trillionaires or whatever. But who cares if the dollar doesn't buy anything? What's the difference?
Well, that's exactly the point. I don't think they care. And I mean, I'll take it a step further. I was debating this with Dave Kranzler last night. I mean, I think there's some point in which what they want doesn't matter anymore. It's like we'll pull up an article. It looks like the bond market, something wacky happened again last night. And what is Jerome Powell or Christine Lagarde going to respond with? They're going to print more money. It's the only thing they're going to do. And it seems like I think we're seeing these things in the bond market because people are realizing what a Ponzi scheme is. And my guess is that Exchange Stabilization Fund and Plunge Protection Team and God knows who else is in there printing money to support it. Although you mentioned really when this happens is that when the COMEX says we can't fulfill the metal, and that's why I wanted to discuss today that metal is leaving. Can you put in context that has metal ever left like this before? Is this much metal left before? And I guess along those lines, it seems like the kind of thing that like a bank run where it starts slowly until it escalates incredibly quickly. What do you think about that?
Well, yeah, I think that metal has left the COMEX like this before. Pretty sure around 1980 it did. And I think in 2011, there were some deliveries that got a little bit hairy. But I think now we have a combination of the paper bag that traps all of the physical silver demand into these ETFs almost being full, and metal leaving the COMEX at the same time. Now that we haven't been in, because like in 1980, right, when January 1980 when silver went to 50, there weren't any ETFs to trap all the physical demand. So if you wanted silver, you would go buy it. I mean, I remember listening to Jim Grant of Grant's Interest Rate Observer, right? He's one of the smartest Austrian economic school investors today, I think. And he was saying in 1980, when he started his career, he was going in line to bullion dealers and buying gold and silver coins in January 1980, because it even sucked him in at the top. But there were no ETFs back then. There were very few paper vehicles. Maybe there were some mutual funds that held silver, in some kind of small percentage. But if you wanted silver, you went to a bullion dealer and you bought it. Now we have all these paper vehicles, and they're filled to the brim. And once they're full and they can't get any more silver, then those paper markets get all messed up. And then you have like a repricing that's going to be very, very fast in terms of paper dollars. I mean, it could happen in a matter of days, weeks, hours. I don't know. Nobody's ever seen this before. We're in a mountain of leverage upon leverage upon leverage, this humongous, ungodly mountain that has been building since, you could say, the 30s. I mean, it depends where you want to start, but or 1913 when the Fed was founded, and you can feel it swaying. You can feel it swaying, and it's coming down, and nobody knows what happens when that hits. I mean, we can make conjectures, but really, it's beyond our ability to predict what happens next.
Yeah, although would you imagine that you'd have central headlines like central bank will still do whatever it takes, will bond yields rise, fastest rise in 50-year rattle markets? Would you have people saying could get squeezy fast? These are critical levels to watch ahead of Powell's speech. Which, by the way, how excited is he talking right now? Actually, did that start? I think he may be. Just check the bond market. If it's selling off, we'll know.
Yeah, did the world end while we were talking about it? I don't even know.
Yeah, well, I mean, wouldn't that be cool if he invited Ben Bernanke as like his backup witness? And while we were on the air, let's see. Fed Chairman Powell says economic reopening could cause inflation to pick up temporarily. So just looks like it caused the bond yield to pick up temporarily. Oh my God, this was at 1.7 about an hour ago.
1.52. Good job. Okay.
So Jerome Powell is talking and investors are fleeing the bond market. Rafi, I know I try to make the show somewhat fun and entertaining. I mean, is that just being funny, or is that a reasonable way to say what you're seeing here?
What is it reasonable? What?
I mean,
say it again?
it's almost as if people are watching Powell and exiting the bond market.
Yeah, could be, but you
I
know,
mean, look at it. This is when the guy started speaking and things spiked up. Let's see how high it got here.
I think the high was 1.6 on that. Geez, okay.
So here we got 1.52. It's at the high today. I mean,
well, you see,
First Majestic Silver now getting spoofed down 44 cents, which is interesting since you had a short position on First Majestic Silver, and I wonder if people were getting stopped out of that one. Although I'll make sure to at least mention it to the kind folks at First Majestic Silver, who've done really a heroic and admirable job of running a company producing a vital commodity for the world in between these frat boy bankers rigging, stealing, and leaving evidence everywhere, I might add. But Rafi, thoughts on the bond market? It looks a little rocky here.
Oh, yes, definitely. So the fundamentals of the bond market, especially the 10-year to the 10, 20, 30 year, is that what Yellen is doing since last April, there has been about a $1.5 trillion treasury bill treadmill. The treasury issues between 1.4 and 1.6 trillion dollars of short maturity treasury bills every month in order to pay down the previous 1.5 trillion. So in April, they raised all this money to push interest rates down. And now Yellen is going to lower the cash balance at the Fed. And she's going to do that by stopping the issuance of about $1 trillion in short-term bills. So all that money is going to be gone to paying down the principal of these auctions. And then the entire deficit of what? It's going to be 3, 4, 5 trillion. It might be 7 trillion by the end of the year. Who knows what it's going to be? Is going to rest on the back of these 2 to 30 year treasury auctions. That's where all of the burden of the deficit is going to be. That means the issuance on this long-term paper is going to have to be gargantuan, and it hasn't even started yet. So whoever's selling now is getting out before these auctions start, and they could be 100 billion or more per auction. We're going to see the 2 year, maybe the 2 year and the 10 year and the 30 year on March 9, 10, and 11. You have these primary auctions. So what are the primary dealers? What are they going to bid on them? The primary dealers are also having a problem. They can't fit any more treasuries on their balance sheet. There's too much already. They have to keep a certain capital in order to legally have this amount of treasuries on their balance sheet. So they can't even buy it off the primary market now. I mean, they need the Fed's permission to even buy these treasuries that the Treasury is issuing. So
Rafi, do you think that's why yields are jumping, or do you think it's because anyone cares about Powell's inflation comments, as this headline would suggest?
I think the two things feed into one another. I mean, there's the plumbing, and there's the macro. There's the inflation. So they reflect the same direction on different kinds of traders. The ones who look at inflation are the ones who are selling for that reason, and there's also the ones who are looking at the issuance that's coming and the amount of cash that's being flooded into the system by the end of March by Yellen. And they're selling for that reason, but they're different reasons that reflect the same end game. Not every trader is selling for the same reasons. They're looking at different kinds of risks, but all different reflections of the same direction. Get out of treasuries from whatever angle you're seeing that in.
Rafi, do you think there are people taking a haircut on Tesla down 4.66% today?
People taking Tesla. This is like a video game now. I mean, who knows what Tesla is worth? They don't make any money. Do people even remember that they're supposed to build cars anymore? I mean, people have been locked down for a year. I haven't driven my car much in the past year. People who driving cars, they're locked down. So, what, maybe in Texas next week you can start driving cars again. But
Come drive. You can come pick me up. We'll go stop at the Tesla factory, ask your questions, and I'll be man enough to admit I don't have the first darn clue. Although what I find intriguing is that we've seen what happens when markets get juiced with trillions of dollars of Fed cash, and we know that things are on margin and leverage. Just to me, that this is January 25th. So that's like call it 5.5, 6 weeks ago. So Tesla from 883 to 623, is that ballpark about 25% sound like to you?
something like that, yeah.
So, I mean, similar how we heard that there were some shops that got blown up on the GameStop move, and I don't know exactly what happened with Melvin Capital. It doesn't sound completely free market. Wow, there's Tesla now down 5%. Do you think people would be getting margin calls today on a move where a lot of people pile into a stock like Tesla and it's down 5%?
Yeah, it could happen, especially to the little players, the ones that are bored in their parents' basements buying these things because they see their accounts going up, and then they borrow some money from Robinhood and then they get stopped out, or they get margin called out. I mean, it could be. I don't touch these stocks. These things are dynamite. Just forget it. I haven't been following Tesla for the past months since it exploded. When did it start exploding to past 800? Started going vertical. Was it maybe like 6 or 7 months ago or something like that? I don't even remember.
Well, I'll show you some real financial chicanery if we get this baby loaded back up here. So here is Tesla. Let's go back to the 5-year chart, because would you believe, Rafi, I know this is going to be hard to imagine, but here is, yes, our swap line, September of 2019. There's Tesla at $45 per share. Fed starts swap lines and you get up to 880, which is quite a return. I'm sure those two factors are completely unconnected, but yeah, seems like quite an acceleration in the last year. And I don't know, you tell me, is there any connection to the printed cash there?
Well, if you increase the amount of cash in the system, the prices of things are going to go up. If you give the cash to the banks first, the prices of the things banks buy are going to go up, and banks buy these momentum stocks. If on the other hand, you take the money and you put it right into consumers' checking accounts, they're going to buy food and they're going to pay their bills. They're going to pay their mortgages. That's what's going to happen.
They could also buy silver.
Buy what?
You could also buy silver.
Yeah, that's what I do. I mean, I'm waiting for my $2,800. I'm gonna go right to the First Majestic store, and I'm gonna buy some more.
You better hurry up, buddy, because when you think about it, let alone the money coming out of the Tesla market,
whoa,
looks like the market is continuing to laugh in Jerome Powell's face. It's like maybe what we talked about 20 minutes ago of the market finally realizing the paper tiger that the Federal Reserve is. That is quite a rout. And I might add, these Zero Hedge articles appeared last night. So Zero Hedge again calling their shot. But Rafi, I know you're like, bond yield talk there, silver boy. Let's get back to it. So it's kind of funny because I laid my theory out about, actually what happens if these guys do cash settle a couple of days ago. Oh, did I beat Peter DeGraff to it? I'm not sure. He was on Monday, February 22nd, but tired of watching silver being manipulated. Here is a plan. We'll cut to this paragraph. Rafi, would you like to have the honors of reading this fine sentence out loud if I can? However,
at some point, the demand for physical silver will overwhelm the short sellers, and those who run the silver futures market will declare, sorry, there is no silver. Here's your check. The technical term is force majeure. Yeah, put a French name on it for we ran out of money.
So that doesn't sound normal. Now, again, Rafi, as you're well aware, I'm a giant conspiracy theorist. And although I was sacrificing to take a couple minutes out of my flying saucer this morning to record this show, But we saw that was on, oh, I guess that one was last week. This February, February 22nd. He beat me by a week or two. So there's Peter DeGraff. I'm not too familiar with him, talking about force majeure. And then there were some interesting comments from Jeff Christian. Almost said Jeff Curry, my bad. He was on Kitco last night, and I will play this for you and see what you think.
Okay, to meet that COMEX demand. So if everybody who has open interest takes delivery, the market blows up and defaults. First off, it doesn't default. It just changes to a cash-only settlement, or it resolves it in a different way, which the bylaws of the COMEX have always had in the capacity to do. Yeah. And they did a liquidation-only order in the late 1970s.
Gee, given the first half of this episode, I wonder what someone holding a long COMEX contract is feeling upon watching that. Rafi, what do you think?
Well, if they're holding a long COMEX contract because they want gold or silver, then they're going to be disappointed. If they're holding a gold or silver contract because they want to increase their dollar holdings, they're not going to care. But they are going to care when they realize that that once that happens, that is a default. When you can't deliver on the money. And what you see, what Jeff Christian doesn't understand, he's correct that, yeah, it wouldn't default in his definition of a default, which is you don't have the money. A default means you don't have the money. The question is, what is the money? For him, the money is the dollars, the paper dollars. And of course, the COMEX has the paper dollars. Whoever has the contract, they have the paper dollars. It's not hard to get. The money is the silver. If you can't deliver the money, then you default. I mean, in 1934, when Roosevelt, took everyone's gold at $21 an ounce, and then gave everyone $21, and then revalued it at 35. If I could steal people's stuff and then revalue it, I'd be rich too. But that was a default.
You know what you would be?
I'd be
a congressman.
I'd be a congressman.
Come on, you gotta chuckle at that. That's one of my better jokes, but
I'd be
so I will
not Rand Paul. Rand Paul, we can give him a pass. He's doing good work. But that's about it. So see what that's what Christian doesn't understand. I would challenge Jeff Christian. Say I'll make you a bet of a silver coin. All right, that the day after the COMEX says force majeure and we're gonna just close all these contracts with paper, I challenge you to go into the grocery store the next day and try to give your dollars to the clerk for some food. See if it works. It's not gonna work because the money is the silver. When you run out of money, then everybody tries to get silver for paper and they can't do it. And that's the problem, that people don't have the physical. They need to get the physical now, they can still get it, or they're gonna be in trouble. They're not gonna have money. People need money to continue the division of labor, and the division of labor cannot work without a functioning money.
Yeah, well, you might want to request that ounce of silver in escrow. I don't want to see that paid with a COMEX future, and then Jeff Curry comes along and smashes it because they're hedging metal that they don't own. Interesting. It seems like there's not quite a very positive reaction. I hope my ratings are better than that. I mean, geez, more disfans than fans. Rafi, there's another thing I found interesting upon listening a second time. I can't wait to study this one. It was quite educational, I will say that. Been enjoying watching his channel too. And then I watch different movies and then watch his channel and then think about things. And I don't know, maybe we'll make a video about that some other day. Stay focused here, they tell me. But I want to play something again for you here.
Demand. So if everybody who has open interest takes delivery, the market blows up and defaults. First off, it doesn't.
So he says, he pointed out prior to that the whole reason that we're all conspiracy theorists is because 99% of the contracts are rolled over, which I agree with, but you better hope that continues happening. You better hope that, that's a great system if you're not running a hyperinflation campaign and it's getting so obvious that even my dog can understand how these guys are just raiding any piece of metal they can. But again, I'm going to play it again. Hear how he says, the market could blow up or there's a default. So he lays out two conditions. A, the market can blow up. B, there could be a default. And then as he clarifies that, he explains condition 2, but does not say anything about condition 1 of the market blowing up. So let's hear that again.
Takes delivery, the market blows up and defaults. First off, it doesn't default. It just changes to a cash-only settlement, or it resolves it in a different way.
Rafi, any thoughts on that one?
Well, you're making a diuk, let's say in Talmudic terms, dividing between blowing up and defaulting, right? You're saying he admits that the market would blow up, but it wouldn't default. Okay, so fine. If he wants to say that, yeah, the market will blow up, but it won't default because you can just give people paper for your contracts, and then, you know, assuming they'll be happy with the paper, but they won't be happy with the paper because the paper won't buy it.
So basically, and when you think about how he defined what is or isn't a default, really, when you break that sentence down, now I don't know, maybe the guy was nervous. He said he's been on Kitco for 30 years, so I'm sure he's able to handle the pressure by now. I've only been doing this a couple of years. I'm a rookie conspiracy theorist, but I assume he meant what he said. And if you break that down slowly, he said the market can blow up and they can settle to cash because it's in the contract. I'm going to play it again and tell me if you take his sentences at face value, if that is indeed what he said. You can tell me.
Blows up and defaults. First off, it doesn't default. It just changes to a cash-only settlement, or it resolves it in a different way, which...
Would you agree with my statement?
Yeah. Yeah.
Oh, it was a trick question. I got you, buddy. I know it's a little bit later in the day in your time because, see, I'm a step ahead. I check raised you there. Because what it left out is that it could be resolved in another way. You might have missed that.
Takes delivery, the market blows up and defaults. First off, it doesn't default. It just changes to a cash-only settlement, or it resolves it in a different way.
Rafi, what do you think you could mean by resolves it in a different way? I found that a rather intriguing and unusual comment for someone who's explaining how there's no chance that that silver squeezers are just going to lose money. So thank God I watched this in time to debunk my own.
How
how silly I feel having put out this book full of evidence about my conspiracy theory. So Rafi, please correct me so I can stop embarrassing myself on the air.
Well, it resolves it in another way. What? I mean, like with fisticuffs? I don't know. Are you going to beat them up? What are you going to do?
Actually, I do know the answer to that too. I told you I've been thinking a lot and I get a lot of emails. You want to know what the plan is?
What's the plan?
Jamie Dimon is going to ask everybody to close their eyes and count to 28 trillion. And then they're going to go try and they're going to ask they'll let the grandmothers keep their eyes open. They're going to ask them for their silver. And that's how they're going to get the silver for delivery. Or as Jeff Curry pointed out, he counted the below ground open interest. So they may pick up some from the Earth's core. I think those are the two most likely scenarios, or the force majeure, the three most likely scenarios.
Yeah. I don't think they're going to be doing any of that. But yeah, he said, you know, the silver.
Rafi not digging that money. Prince joke, but continue, please.
Not digging that. Oh, Prince joke?
No, my Prince joke. I'll behave myself and stop now.
Okay. So what he was saying that silver squeezers are going to lose money. I mean, how can you lose money by accumulating money? I mean, that doesn't make sense. You have when you're in this game for the long run, you have to have a concept and a confidence in what is money. And silver is money. The dollar is not money. It is a money substitute that stands in for silver. How could you lose money by buying the actual money with the money substitute? I mean, yeah, if you're gonna play the stopping game and the leverage game, yeah, you could. If you're gonna play this like a casino, then yeah, you could lose. It's dangerous. But if you're just going to accumulate money, physical money, month after month, year after year, then eventually you're going to have the money and the other people are not going to have the money. It's as simple as that.
Yeah, although speaking of having the money, show me the money, all this silver talk, and obviously, Rafi, you and I were just dudes in our basements, what do we know? So let's at least get someone who actually is involved in the market rather than this silliness. You ever heard of this guy, Rick Rule, Rafi? You familiar with him?
Yes, I like him a lot.
Well, I hear they buy some silver from time to time. So let's check in with Rick for an update, courtesy of Mining Stock Education. That's Bill Powers, I believe, and play just the intro here.
You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We've been able to buy about 30 million ounces of silver. Now, I'm not trying to say it's always been easy, but we've been able to do it. We're probably the largest real physical silver buyer in the world. And so we get very good service from the market. But it has actually begun to become difficult for institutions to buy silver.
Thank you for tuning in to Mining Stock Education.
All right, Rafi, what do you make of that? I mean, I know the whole suppression silver squeeze is a conspiracy theory hashtag, but that's why I have real guests on the show who can correct my sloppy research.
Well, if Rick Rule is saying it's hard to get silver, then he's probably telling the truth. I mean, we saw in February, it was almost impossible to get silver. I've said this before, there's two very different kinds of silver demand. There's industrial silver demand, which doesn't really change that much day to day. I mean, it flows as industry grows, but there is also monetary silver demand. And that kind of demand wakes up all at once and very, very quickly because sometimes people have a panic and they say, what is this paper? And I got to get something real. And they go to silver. We saw it happen in February. We saw it happen in May 2011. We saw it happen in 1980. Each time, the Fed was able to keep things under control by keeping the paper price down. But there's no more room to do that because the ETFs are full. The next time we see something like February, that could be the end. Maybe not.
You mean like last night when you had historic repo market insanity and 10-year treasury trades at -4% in repo ahead of monster short squeeze? Doesn't sound good.
Yeah, that's what I was telling you about before the live stream started, that article. So this is a very difficult article to get through, and I tried to break it down. I think I broke it down successfully for my subscribers at the Endgame Investor of what this is actually talking about. So from what I understand, right, basically there's so much paper coming into the banking system that banks don't have room for it on their balance sheet. They cannot buy these treasuries anymore. So they need the Fed to allow them to count to not count treasuries as part of their assets. So if treasury is part of it, if treasuries are considered paper assets, they need to be backed by a certain percentage of capital assets. But if they're not, then they don't need to be backed by a certain percentage of capital assets. The Fed, the banks are out of room. They're out of capital assets to back more paper assets, so they cannot buy more treasuries without the Fed's permission. And the Fed has until March 31st to give them that permission. So in the meantime, there's this huge short position opening up in 10-year treasuries because of this. Because if the banks cannot buy them on the primary market, then yeah, they're going to crash. So you have all these short positions in the repo market using 10-year treasuries, pushing the rate to negative because it costs so much to borrow these treasuries to short them. So we see this short position building up, and if the Fed is going to have to continue its rule that was instituted in April to allow banks to keep buying more and more treasuries without backing them with capital assets, and they will. And once they do, then all these yields are probably going to plummet, and real assets are going to go through the roof. I don't know exactly what happens, but it's going to be a dislocation across all markets. 1.543 now, keeps going up. Yeah, something's wrong. All right, I can't hear you.
Oops, sorry about that. Rafi, it's almost like Wall
Yeah.
Street is watching you explain the bond market to them in real time. And they're like, oh my God, this whole thing's a Ponzi scheme. Get back in there and sell them or whatever. So,
Yeah.
I mean, this is, because it's like you saw it last week where it spiked up, and it's one thing when it happens once, but when these short squeezes keep coming back, not just in the bond market, but a variety of asset classes.
Things are coming apart at the seams. Things are coming apart. I can see it.
And it's even beyond what you can see. To me, it's kind of stunning. Just, I don't know. It's like you feel it falling apart by the stories that come out. I mean, it's there logically, but to me, there's and I hope I do a good job of phrasing this on the show and not, but there's something like inside me that is like, oh my God, there's something happening now. Rafi, you also did a great job of pointing out that how that's evidenced by backwardation in the silver market. Could you explain that for folks and what you're seeing there?
Right. So this backwardation chart, I plotted the silver price, and each time that backwardation occurred, backwardation is when the price for the spot contract is higher than the price for the futures contract. That means that there's a physical shortage. But really, every time that's happened, within months, silver has skyrocketed. It was back in there's February 2011. Even in 2010, there was backwardation. Then about a year later, we saw the jump to 50. There was backwardation in the second spot there is September 2015. And then by July the next year, it was up to 21 from a low of I think like 13 or 14. And then there was backwardation in March 2020 when silver went to 11 because the demand to deliver on the spot contract so cheap was higher than the price of the futures. And then from there, silver went from 11 to about 30. And now there's backwardation again, except the difference with this backwardation is that silver is nowhere near its low, and it's bordering on backwardation. I mean, I think I saw a report that it closed on a settlement basis backwardation yesterday. I'm not sure if that's accurate, but the term structure, I mean the difference of the prices between the spot contract and the futures contract is very
Rafi,
tight.
Sorry to hop in, but a real live spoof during your appearance. Silver has just dropped 57 cents as the banks have stopped more customers directly out of their metals and just stolen. Wow, that is so dirty. Oh my God. And look at this red one here where it drops down a couple of times, then shoots back up. That is so, and they do it every day. It's like,
the more they do it, the more desperate they are. But good, let them do it. It'll just drain the physical stocks. That's all it'll do. Let the price go lower until they run out of physical.
So Rafi, we're gonna start getting ready to wrap up here. Although I couldn't let this go without you commenting, because here's the CFTC. They said that they're investigating Reddit traders with respect to precious metals. I want to reiterate that we are closely monitoring recent activity in markets and on social media. Should I perceive that as a threat, given that I do a show on, I don't know, YouTube, social media, and they're investigating the Reddit traders, yet this happens? By the way, fortunately, I know the CFTC, their career ended this morning because my hero, want to get the man's baseball card, Ronan the Destroyer Manley, decided to take on the CFTC. Here, Rafi, here's my dedication to the show. I didn't even get to read this yet. I was just glowing knowing that, that is beautiful there. Let's everybody take a screenshot of that one.
Wow. Where is that?
It's like where the Hollywood sign is. Instead of Hollywood, we got silver. Ronan knocked it down. And I wouldn't want to be the CFTC when Ronan is on the CFTC's case. Here's Rostin Benham. Now, I know he shows up, maybe he can't investigate silver. He was at a climate change convention where JP Morgan was. I hope they're not running in similar circles. That would seemingly be a conflict of interest when you have things like this happening that are about as... Rafi, I joined Wall Street in 2001 at Moody's, and within my first 3 months, I was running from the dust cloud on September 11th, and I learned about Moody's involvement in Enron. Internet.com bubble had burst, lived through subprime. This is without a doubt, this is a new level of dirty. See, look at this. This is even what Andrew Maguire, in that letter he wrote to the CFTC, which people can still see online. This is typically what they do before, like, the labor report. So if it's something that, the labor report's bad, the Fed's going to have to print more money, and people start buying, he actually described how they let it lift off first so they can get more people on board, and then just dirtily stealing directly from them, while the CFTC sits there and actually had the audacity to say they were regulating these markets and fine for spoofing as they do it again. And then the CFTC says they're investigating Reddit. So Rafi, don't worry. I'm going to get my partner to make up some Ronin t-shirts. Ronin versus the CFTC. Oh, it is going to be glorious. One final question for you, though.
Yes.
We saw the London gold pool coming out of Bretton Woods, which is exactly actually the same thing happening now. London gold pool ends, you go to the COMEX, one fraud into another. Looks like the COMEX is ending, whether it's today, tomorrow, next week. It's getting harder and harder for me to see next year. Would you agree with that?
Yeah, it could be. I don't know how, we all see a big mountain of leverage. We don't know exactly how stable the base is, but like Yertle the turtle, Mac is going to burp and everything's going to come down. But I'm not the architect of the mountain, so I can't tell you exactly how stable it is. But yeah, a year seems to stretch from what I can see, from what I can feel.
And I just wonder, it's like we've heard about a reset for so long that people get tired of hearing about it. I don't know. It could have been planned 50 years ago for some date in the future, and it just is when it is. What I have a hard time figuring out is how else this otherwise gets resolved. Either the market is going to reset it, or these guys are going to do the equivalent of going from London gold pool to COMEX to... And Rafi, for your parting words before I get your website up there one last time so people can see the antidote to Wall Street and where they can get that. But what should be the name after the COMEX unravels? What should we call the next scheme to replace it? Should we just call it COMEX Part 2 so it sounds like a movie and as silly as it actually is? Or any good suggestions for the name and how folks can get access to your great research?
Well, we have the London gold pool. How about the London dollar sewer?
The what?
The London dollar sewer. I don't know, like the opposite of the gold pool. I don't know. So I can end with a biblical note. I try to put in a little reference in my appearances in different shows. So the Jubilee is a 50-year cycle. It's built into the biblical cycle of a debt jubilee. I don't think that's by accident. That's a built-in deleverager in an economic system, that every 50 years you start over. Debts are forgiven. That prevents these kinds of leverage mountains from piling up on themselves. So we're in the 50th year of this fiat dollar system that started in 1971. The 50th year starts in August. So the jubilee of the dollar, in terms of its age, starts in August. And the last thing I'll say has nothing to do with gold and silver. But if you're in Texas and the governor there, just said in a week you can go back to your lives and you can actually live again. You got to play this like Mortal Kombat, right? It's finish him. Like not to call on any violence. I'm not calling it any violence or anything. But Texans, I would call upon you to go to your governor's mansion and blockade it and lock him down for a week. If the lockdowns are over, get out of your houses now. And a week of your life, go out there, live your lives, and say, okay, we'll lock you down for a week and just surround the house, keep him in there, show him what a lockdown is like, lock down the governor, get out there.
Well, Rafi, I don't know if you heard this, but actually when the power was out in Texas for a couple of days, I actually did walk over to the state capitol and saw the lights on there. And I stopped at JP Morgan on the way, but definitely is not on YouTube where anyone could see that. Although, folks, let's all give Rafi a big hand for his incredible research and appearance, the endgame investor. And Rafi, since you mentioned debt jubilee, is it interesting that 50 years later, they're on March 16th and 17th, a day after the death of Caesar, and known as the Ides of March, a debt jubilee? I'm sure the occultists will have something special planned for this one, and I'm sure you'll be here to cover it and be miles ahead of Wall Street. So thank you, sir, and I'll look forward to doing this again soon.
Me too. Thanks for having me, Chris.